Hey YouTube, we're back for another video. This is going to be a trade recap, time-lapsed trade that I took on Monday, the 30th of September. And I'm just going to try and walk you through my thought process on this trade. So we can see that the Asian low was taken and we immediately retraced back into the range and we market shifted. So now I'm depicting the breaker block. I'm going to also depict the fair value gap in a moment. So yeah, I'm going to depict as well in a few moments or in a few minutes the relative equal highs above. Yeah, so here I'm going to also signal the fair value gap that I want to see opened, kept as open, so not traded to, because it would be ideal for us to not touch it and just quickly run into to our take profit, to our target, to the fair value gap above that I'm depicting now. Yep. So now the price action looks good. So I wouldn't want to see that yellow shaded area being touched. As you will see, price action will become a bit lethargic, not impulsive. You'll see me depicting that in a moment. There you go. Also pointing out the order block that's forming, so it's good. If you're in a bullish scenario, you want to see bullish PD arrays being formed, and that's exactly what's happening now. Just moving the RR tool to the right so we can see the price action, which is the most important thing. Yeah, I'm just questioning if this is going to indeed stay open. That's what I wanted to happen, especially now that we're on our way, but we're not showing impulsive price action. So if we were to trade once again to that breakaway gap, meaning that breakaway would not be a breakaway gap, it would be a regular fair value gap. If we would to be traded, if we would trade once again, that would be not a good sign, because you're adding up not impulsive price action, so lethargic price action, plus a deep retracement to a breakaway gap, what should be a breakaway gap. So that would not be good, right? That's what I'm thinking. That's my thought process. So now I'm pointing out not impulsive enough. Now we're seeing a big candle. And we're almost at that fair value gap, which I labeled as possible speed bump. We have another fair value gap signaled in yellow, from which we're reacting now. But this shouldn't keep price from going higher. At least I wasn't too worried about that. But now I wanted to see this green candle forming. I want to see it push through rapidly. Otherwise, yeah, we would most likely go lower. And I didn't want to see that. I'm labeling now the last line of defense, which is the breaker. I would say the breaker is the last line of defense, and probably the breakaway gap. But if we were to trade to those prices once again, it wouldn't be good. Even though I label it as last line of defense, I mean, if we were to trade to those prices once again, my stop loss would be next, most likely. So let's see if this fair value gap holds, plus the order block, of course. And I think I'm about to close the trade in next few minutes. So I weathered this retracement, and yeah, if we break that price level, marked in black, most likely will go lower to the breaker block, to the breakaway gap, and probably the stop loss. So yeah, as you can see, price action is not being too good to us. It's making us, it's keeping us emotional. If you don't have a good psychology, you'll get emotional for sure. And actually, I just recorded this for YouTube purposes because I don't watch my trades. I just set a take profit and a stop loss, and it is what it is. Just let the market do its thing and move away. I found that that's best for me. So now finally I marked out the liquidity above, where I think price may go if we are to stay bullish. And then we might reverse from there. Can we form a order block here? Of course, this is where I cut the trade, closed the trade, and I posted the screenshot from MetaTrader. An order block form, the fair value gap. I don't know if I'm going to label that, but that's a fair value gap right there. Yeah, I'm labeling it right now. So I always target 1 to 1 to 3, 1 to 1.3 or 1 to 1.5. And this trade reached, I think, 3R. But this is not ideal. I had so many trades where price action was behaving like this and my stop loss was hit. That's why I took profit a bit earlier, because I knew that this price action would not be sustainable in the long term or in the next 15 minutes, I would say. Yeah, that's what I'm explaining right now. So we'll see. Now I'm out of the trade and I'm going just to play around in TradingView once again and actually enter in another trade. Yeah, that's what I'm saying now. If we close above the upper quadrant of that fair value gap, we most likely will hit the liquidity target above in the blue line. And I think I'm going to enter here, I think. Again, we'll see. If I show the executions, I don't remember. Another last line of defense. To me, that's the one. If we break that, we're definitely going lower to the breakaway gap and possibly the low below. That's what I'm going to point out here. Yeah. So I don't see if I entered the trade or not. Can't remember, honestly. Maybe I waited a bit more. Another order block being respected for now. I think, yeah, I entered here, Hufflefield, I think. Yeah, the executions were not on, so apologies. I'm not really used to TradingView once just yet. I usually trade on MetaTrader. Yeah, that's what I'm saying. This is just because. This is not a live trade. I mean, it's a live trade, but it's not counting for my account. An awful feel, yeah. And so now we'll see if we target the liquidity above or not. Yeah, as you can see, the amounts are just too low. I mean, it's just so I could play around a little bit. practicing the continuations, still testing some things, but price action is not very good, right? So we're breaking and retesting, breaking and retesting, so not good enough. That's what I'm going to point out here. Yeah. So yeah, in the typical situation, or in a normal situation per se, we would already had reached the liquidity target above. This is going too slow, and in a kind of a fast market, we would already be taken. We would already be at our target, especially because I think it's okay. This is all price action before 8 a.m. GMT, so 3 a.m. EST, Eastern Standard Time, New York time. So we'll have London open in a moment, in 5 minutes, I think. And I think I'm going to point out that as well. We usually have 2 moments of injection of liquidity and volatility in the London session, which is at 7 a.m., so 2 a.m. New York time, and 3 a.m. New York time, 8 a.m. GMT. Those are the two main drivers of liquidity and volatility in the London session. So we're now going to experience the 8 a.m. Volatility injection. And we'll see if it targets the liquidity above. Now I'm putting the trade at PE, break even. Not accounting for commissions. I mean, I should have, but I forgot about that. As this is just playing. Took a partial there, above the high to the left. Well, almost there. Almost at the 2 a.m., then 3 a.m. / 8 a.m. GMT, all London open. And here we go, and I'm out for break even. It was too fast, that's why I don't like to trade immediately at 8 a.m. because you can be in a good trade and all of a sudden you're out just because. Yeah, I'm now saying that I don't know what happened exactly with the executions, and it turned out that I actually lost a bit of money in this case, virtual money, because I didn't account for the commissions, and the first partial counted, so that was filled, but the commissions ate all the profit. So now we're about to hit our liquidity target. Just a few more seconds. I'm delineating once again another fair value gap that should support price until the liquidity target is met. And here we go. Just a bit more. And we're almost there, and we're hitting the target once again. Yep, and I'm now going to close the video. So thanks for watching. I'll catch you in the next one.